We believe that wealth is a journey, and that this is your jumpstart to trading success. Hello everyone, and welcome to a special edition of the Trader's Mindchat show, where we believe that wealth is a journey and that this is your jumpstart to trading success. Today, I've got my good friend Anthony with us. Welcome to the show, Anthony.
It is a pleasure to be here, my friend.
So, Anthony, AJ, and I, we grew up, went to high school together, and he was a commodities broker for, how long were you
A
doing
broker
that?
for a period of about 12 years. A clerk and coming up in the business for about 3 before that.
So I thought that it would be fascinating to do an interview with you to get into like your background, like how you, not just how you got into that, but also you were one of the people that inspired me to that you actually can go and do this and trade for a living, because when you were doing it like that was your full-time gig. Like you were living off of the profits that you were getting from the market. And like back then, this is going back to what, like early 2000s, that like understanding like, oh, like you actually could do this for a living. And
Yes.
so I wanted to get into some of those mindsets, some of the budgeting, because there's a lot of people out there right now that, you know, you're working your job, you hear about trading, and you want to leave and do this full time. So I think that it's important to hear the mindset that you had, the budgeting, like those kind of things as well. But
Life situation's important. What you are able to spend, what you're able to risk. You have to be aware of all these things.
yeah,
And I was at a different point in my life then as I am now. But those rules still apply no matter what part of life you're in.
so
They just vary in degree.
and we'll get into all that. But I'm curious to hear. Go. How did you get into this in the first place?
Well, it was kind of a haphazard way to stumble into it, actually. I wasn't planning to do it.
Okay.
I graduated college in 2003.
All right.
I went away to college at Drexel University in Philadelphia.
Mm-hmm.
I came back, started job hunting. I didn't really know what I wanted to do, but I had a degree in marketing and a graduate degree in management of business. So it's still something I can use today, so that's good. But my direction back then was somewhat limited. So I applied to jobs. I looked around. I interviewed with several companies, and nothing was offering anything substantial. I was having a tough time finding something that, I wanted to do, combined with something that offered me something of a decent wage.
Okay.
So after some frustration, I temporarily decided to take a small temporary position on the trading floor. My father was a commodities broker throughout the late 80s and 90s and 2000s as well.
Okay.
And a friend of his just needed some help for the summer. So I went down there. Actually, it wasn't summer, it was spring of 2004. I went down there just to help him out for a little bit, manage his books. I watched copper orders, and as they went up and went down, I would hand them an order that was close to the market so they can execute it.
All right. So this is back where they were doing the
Paper trading.
paper and
Well, not
like people
paper-
like yelling like in the pits and that kind of
That
stuff.
was still going on. It was coming to the point where electronic trading was starting to be introduced, in the near future at that point. So we're talking 2004. I think electronic trading came about in 2006. So at that point, yes, we were managing books, customer orders that he had. If the market was to go up, we were to watch sell limits and buy stops, and the reverse on the downside. It was really as simple as that for a while, and then keying in trades, making sure they cleared against other brokers. So if my broker was to execute a trade, I would enter that into the computer system. It's sold 5 lots of July copper at X price. The opposite broker who we traded with would have to enter buy 5 lots of copper at X price. It would have to match completely. Buy on one side, sell on the other, same price, same number of contracts, and then it would clear out of the system. My job was to make sure that was cleared every day, that the screen had nothing on it, that all trades were cleared. And then
How long were you doing that for?
that was, well, with him just for a few months.
Okay.
With my father's friend, who's still a friend today. And then I moved to another company who asked me to stay on for the summer.
Okay.
I did that same job there for the summer.
All right.
Then that one was a temporary position as well. Still wasn't finding anything else I wanted to do.
Okay.
And went on to work for a company called Millennium Futures Group that had a gold, silver, and copper operation. And I was in copper. So was my father at the time. So we started there. Started as a write-up clerk, still doing the same thing. Write-up clerk is who types in and clears trades.
Right, right.
And in a few months, the climate of the company changed, and some people above me that were doing phone clerks,
Okay.
doing the phone clerk position, which spoke to customers and were closer to the market than a write-up clerk was. Some of them were leaving the company. I had a quick opportunity to take a job doing that, which I did. And at that point, I learned a lot more than being a write-up clerk. You're really kind of away from things. They're the people that used to be runners that ran orders to the broker and ran them back, and typed it. They type in the trades. So, they clear. You're not really in touch with what's going on. But as a phone clerk, go ahead. You want
to I'm trying to visualize this, right? So where are they? Where are they running to? Like, is it another building? Like, is it like another floor? Like,
no. Well, antiquated, old school. They used to have like literal phone booths.
Like a literal phone booth, like what you saw Superman get dressed up in, and
exactly.
Okay.
And a clerk would take an order over the phone and give it to a kid or a runner to run to the broker. Literally, run it out to the broker.
Right.
They'd execute, hand it back, and they'd run it to the phone. Since then, in the early 2000s, which is when I started, the phones were much closer to the broker physically.
Okay.
So runners were sort of a thing of the past already at that point. But you had the write-up clerks that were further back, further away in the booth, clearing trades, getting brokers' cards when they came back, and allocating orders and making sure they match in the system against the other broker.
Okay.
A phone clerk speaks to customers, has to be in tune with where the market is, knows what customers are looking for. So let's say I have a guy who's interested in copper when it gets down to a certain level. I'll give him a call when it gets close. You might want to put an order in here. Or a certain spread value. And now a spread is where you buy a month and you sell a different month. And you're anticipating whether the value between those 2 months will widen or decrease. Certain people that need to roll positions. You might want to be in touch with them on the phone and say, March, May is coming in. You might want to put an order in here. And they'll do it most of the time. These customers of yours are involved in a lot more markets than just the one that you're involved in. So you giving them a heads up brings their attention to something they might not spot on their own. A phone clerk is a very useful thing for a customer to have. It's one of these things that with the dawn of complete electronic trading has kind of been lost in the market. People that advise and give you ideas and give customers ideas of what they may want to be involved in or execute. So
that's interesting.
It is. Those jobs are now, as time went on, electronic trading became more prevalent. Those jobs sort of started fading out, getting fewer and fewer because they weren't getting paid as much. Commissions were less and less. Customers are trading more and more electronically, less and less in the pit, and companies weren't able to pay clerks as much as they had at one point.
How long were you doing that job?
Okay, so I was a phone clerk probably between, I don't remember specifically, but it was, I think 2004 to 2006.
So 2 years.
About 2 years.
Okay, and then 2006, you transitioned into
trading. So what happened was basically 2003 to sometime in 2004, I was just doing the write-up, and I wasn't really learning much. I was just typing in trades, making sure they cleared. That's it. But the 2 years between 04 and 06, I really did learn a lot. I saw what affected the market. I saw news reports that came out. I saw, big moves in the market and why they happened. I got in touch with these things that I never really did prior to that.
So were people teaching you, how things are moving and why? Or
Yes.
Okay.
Very much so. Whether they even knew they were teaching me or not, in some cases. But yes, being close to the market and seeing what drives it, you get a feel for it. And it's somewhere in that 2004 to 2006 period is where I decided, hey, maybe I can do this. Maybe I could take a shot and trade myself. And so I went in the ring in March of 2006.
There's a lot to even unpack it in that. There's so many people, myself included, that when I first heard about trading, that's even like predates us, right? Like this goes back to
Very much so.
learning from my uncle in Astoria, like, hey, Michael, you should take a look at the Wall Street Journal because there's a lot of great stocks in there. And I got this one. He actually pointed out Bluetooth back before Bluetooth was even a thing, and it obviously
The
worked
man ahead
out.
of his time, obviously.
Yeah. But back then, I just thought that you have a little bit of money, you put it in, and more magically pops out the other end, and that's investing. And I learned the hard way that it's a bit more complex
Yeah.
than that. But I thought that it was very interesting that you had that pre-experience, right? Like doing the being a runner and that kind of
The
stuff,
write-up.
and
Yep.
the write up, and then 2 years of which was kind of served as like the basic training before getting into becoming a floor trader.
Yes.
Uh, so many people have the mindset of, okay, I'm going to watch a YouTube video. I'm going to maybe read a couple of books, and then I'm going to start doing this and doing this full time. But it sounds more like you had like a real or more similar to a medical internship, right? Like doctors, they go to med school, right? Like you didn't go to school for this,
No,
but
it's different. It's a little different than the stock market in many ways, but there is a test to become a broker. It's much simpler than the was it the Series 7 stock
yeah.
broker? It's much simpler, and there's classes you take, and there's like a 3-month waiting period, but that's about it.
But you still had other people around
But
you that were guiding you.
oh, absolutely. But it's a lot riskier trade than the stock market too. Things move a lot faster. Things are you're a little more exposed as far as what you're risking. In the futures market, a contract is you don't have a choice how much to risk. So, I mean, you can put an X number of contracts on, but that's it. Every trade is $12.50 a tick, and they tick quickly. So you can really make a lot or lose a lot very quickly, depending on the way you trade. And I did learn that the hard way too at some point. If you want to get into that, I'd be happy to.
Yeah, definitely.
Maybe I wouldn't have wanted to when it was happening, but I've learned from that, and
Yeah, you clearly lived to tell the tale.
I did.
So you transition into being what was the title of that? Like that
Floor broker.
Floor broker. So you transition into that, and what's that like?
It's a different world because you kind of feel like you're one of the big boys. You're sitting at the big boy table for a change, whereas you were kind of looking up from below before that. Not in a height sense, but in a mental sense. And it was great because it opened up like worlds of opportunity for me. I used the 2 years before I got in the ring to learn to say, hey, maybe I didn't realize it before, but I think I can do this. And then I got in the ring, and I felt pretty comfortable doing it.
Why do they call it a ring? Like is it a circular thing? Is it like set up like a boxing ring? Like people are getting in there, you ready to kick some ass? Well,
not
what's
quite,
going on?
not quite. It's literally a ring, or it was when in the older days, I guess. There was literally a ring where brokers stood around and traded with each other. So it was circular. Everybody saw each other for the most part. It had steps going up and down into the pit. And everybody kind of saw each other. So it was easier to catch people, see people that you might not see otherwise. It's literally it was a ring. So every commodity had a ring. They had a gold ring, a silver ring, a copper ring. Then where we were for a while, on the other side of the floor was copper, sugar, and cocoa. I mean, coffee, sugar, and cocoa. Those were a different market. And then eventually we merged onto the same floor with crude oil and all the other the natural gas and things that you see more often in the news, the mercantile exchange. So, but literally every one of them had its own ring,
right?
A circular area where we all face each other.
And so when you first started to trade in there, was there another layer of mentorship while you're doing that, or you're kind of on your own at that point?
No, the learning never stops. I'll say this. You never think that you've learned everything you ever need to know, because I would say that probably about anything in life. But, I made some boneheaded trades even 5 years after I started doing it. and I've made some very good ones. But the learning does never stop.
Did you have like somebody mentoring you, or were you learning by doing and like asking other people in the ring? Like, what was that?
I mean, a little bit
like?
of both. A little bit of both. My father was there for a while I was a broker, and then he moved out of town. Decided to semi-retire for a while, and other guys. I mean, I was the youngest one in Kappa for the whole time I was there. It was just about. So I was. I mean, I was. Let's see. I was 26 or so, 25 when I started, and 38 or so when I stopped. So, I was the youngest guy. This was somewhat of a good old boys club.
Wow.
And I don't have a problem with that, but I just was the youngest guy there.
Did you see people come and go in that kind of environment?
Yes. There were guys down there that never adapted to electronic trading. Where when that happened and things changed and less volume was coming to the ring, they only knew one way of trading, off paper. Most of the guys that were locals sort of disappeared. Locals meaning they only trade paper. They don't work for a company. They only trade for themselves. A lot of those guys disappeared when electronic trading started because there was less stuff coming into the ring for them to, trade off of. But a lot of the guys that were brokers with companies and the ones that put on bigger positions, those are the guys that kind of stuck around longer. And I tried to be one of those, risk appropriate. I was never one of the biggest sharks in the ring, but I did put on, for being the youngest guy there, I was pretty up there with what I put on and positions I took.
Yeah, so there's a couple of things to unpack there. Let's start with the sizing. For me, I trade stocks, I trade crypto, and occasionally I'll use options. But
yes,
position sizing is basically universal almost. As far as you have your account, right, and you're going to figure out how much of your account you're going to allocate, or am I thinking of this?
No, well, like I said though, the commodities market was quite a bit different than the stock market. You're risking a little bit more by putting on a big position in commodities. It can move against you fast. It can move in your favor faster. And there's always both sides of that coin. But when I say I put on some big positions, I am talking about spreads. Okay, and I'm going to get into that because that might need some explaining. When you have a spread position in copper or any other market. You don't have an outright position.
Okay.
You are not overall long or short. You will buy your long certain months and you're short other months.
Okay.
And you may be asking yourself, well, what determines which ones you go long and which ones you go short? Well, it depends on the anticipated future price versus the current price. Whether certain entities out there that need to roll their positions in the future are long a certain month and need to get out of that month and put on another month. So let's say the market's up. What do funds do when the market's up? Do they buy or sell?
Yeah, well when the market's up,
funds generally buy strength and sell weakness.
Yeah.
So if the markets are up or in an uptrend, they tend to be long.
Okay.
A good position, a good amount of the open interest in copper, but every other thing too, are held by funds. And these funds, at some point, need to roll their positions over. So let's say the date's April. So we got the next month active in copper would be July. Prior to that, it was May. It's late April right now, so the May position's probably already rolled into July. So if these funds were long, and that market is very bullish right now because copper's, like other metals during the pandemic, have flown. There are a lot of funds out there that will need to sell that position and buy July. They would have to sell May and buy July.
Okay.
So we set ourselves up short May and long July ahead of the funds. And I put on a few hundred of those, which is a big position. There are guys in the ring that would put on several thousand. I never got there. But, it could be a very risky proposition even despite not having an outright position.
So when
because that value can, there are a lot of factors that determine other ways that can go out or go in, and at some point it pays to reverse that position because it tends to go the other way as well.
So when you're putting on positions of size, what is the chance that well, what's the worst case scenario? Well, what's the risk of ruin? Like, is there a risk of ruin?
Absolutely. And I almost came to it in 2000 and let me think. I want to say it was 2007. It was only like a year into my trading. Could have been 2008, but I think it was 2007 when the we put on positions short 1 month and long the next one in the roll.
Mm.
And it was already at a point in what they call a contango. Contango means, I know it sounds
yeah, I've heard you use this term. Over the decade plus.
They sound like
I
a
still
dance,
don't know what
but
the hell
it's
it
not.
is.
There are two forms of markets: backwardations and contangos.
Okay.
Backwardation means the earlier month is higher priced than the later ones, and it goes down as you go along. And the contango is just the opposite. The front month is lower priced, and they go higher in the future.
Okay.
We were in a contango market at the time. For the most part, we were in a contango market, actually. But we had reached a point in the contango market, and this doesn't work in the backwardation, but in contango markets, there's only a certain distance apart a spread can go, front month lower price than the later month, where banks can start coming in and putting on positions the other direction, and the interest based on the physical price of the commodity and the ability to take physical delivery, they can make money on the interest.
Mm-hmm.
Now, interest rates now are way different than they are now. But at that point, early 2007, we had a big blowout towards a backwardation from a contango, and we all had the wrong positions on. And yeah, I dropped about 40 grand in one day. It was the biggest hit I ever taken, to this day ever took, in one single day, or ever really. And it almost made me quit.
What was that in relation to your account size?
It's about 90% at the time, because I wasn't built up too much at the time.
So about 50 grand, you lost 40 of it.
More or less. Less than,
Wow.
I think 46 down to 4 in one day.
Wow.
It was the only time in 12 years that I ever got a margin call. But it didn't feel that like, a learning experience at the time. It felt like sudden doom. I was actually looking to buy a home at the time and pulled myself out of that market just because, I better wait now, And I was, not sleeping well. And this is the other thing that trading can do to you.
What's that?
It can affect you mentally. It can make you make it hard to sleep, make it hard to think straight. It did that to me for a while. Eventually, I learned, but at the time, and with that all going on, it really took a lot for me to be able to bounce back from it. And a lot of the other guys lost way more than I did, believe it or not, and they came back from it too. But what happened was they forced everybody out of these positions.
Okay.
They made them go against us, and then when you were trading electronically, you would see very few offers in the backwardation, like 2 lots here, 3 lots here, instead of the usual hundreds at every level that you would have a cushion. There was no cushion. There was no size all the way up in the back, and they, if you really panicked, you might have gotten out at the worst points. Luckily, I kept at least a little of my cool and actually sold a little extra in the back, and I came back by doing that. I got out first, and then put some back on when it was at a ridiculous price in a backwardation.
Did all this happen in the span of one day, or was this over several days or a couple of weeks?
It happened over maybe a week's period. But you could tell that there were people playing the electronic market and toying with people's emotions. And if there's one piece of advice,
that intent?
Yes, I do. If there's one piece of advice I can give anybody that goes into this line of work, it's don't let your emotions rule the day. Emotions are, I know it's tough and it's not very, and there were points I didn't follow my own advice, but and it's always easier to give advice to others than it is to yourself. But there are times when, I almost hung it up because of that, because I felt like, all right, I'm not good at this anymore. I can't do this, and let me just go get a menial job somewhere and be safe.
What do you do when those thoughts start entering your head?
You carry on. You maybe risk a little less next time, so you give yourself a easier means to get out of a position, say. So instead of putting on 200 lots like I almost had on that time, the next rollover I think I put on 40. you know.
Wow. So
And eventually I got back to say 100, but I never really went. I came out first, I first started trading. I kind of came out like a cowboy.
Mhm.
I'll be honest.
Yeah.
Putting on these big positions and stuff, and even my father didn't put on positions the size I did. So, guys in the ring that did and still do, but yeah, they thought it was a little, bit of a head case putting on as much as I was putting on. And I said, nah, I can handle it. I got this. I'm good. And then that one big blowout happened, and then I thought twice. I was humbled by it. Once I recovered from it and slowly started to build my equity back up by trading more sensibly and putting on smaller positions and whatnot, I don't want to say it was completely smooth sailing for the next 10 years, but it was a lot more rewarding, and I never felt the same pressure on myself and the lack of sleep I was getting and things like that.
Did you start to scale back up again, like after you got your footing, or did you stay at that 40 level, or
slowly I did. And it was a matter of me being comfortable putting those positions back on. I had never seen anything like that blowout happen before, and a lot of it was just funds taking advantage of the situation and playing on people's emotions. And if the guys with our positions weren't as emotional, we might have fared a little better. But as time went on, slowly but surely, I built up equity, got back in the housing market, and decided to up my positions little by little with what I felt comfortable and what I knew I can handle.
Mhm.
Whereas before that wasn't even a consideration. So it humbled me a little bit. It kept me sane, kept me level-headed afterwards.
Trading is your sole source of income at this point.
Almost. So when I first started trading as a broker, I did have a job with Millennium still, and then there was one other company I worked for that I stayed with pretty much for the rest of my 10 or so more years after that. But eventually, with the electronic trading taking most of the business and less coming to the ring, the company stopped giving me a base salary.
Mm-hmm.
So I got that for a couple of years, but not many. And it wasn't much anyway. It was like a stipend.
Mm-hmm.
And then slowly but surely, even the healthcare, that stopped.
Mm-hmm.
It was like they did 50% and they did nothing. So eventually I paid them for it.
Mm-hmm.
So yeah, and then after that, it was more just a means to an end. And then they eliminated the trading floor physically and totally got rid of outright trading on a floor. And that's about the time when I started to think about calling it quits.
So yeah, and you relatively recently left that
yes. So
altogether.
So they closed the trading floor in, I think it was 2016, maybe 17, I don't know. And they got rid of the physical space for us to even trade in and opened up an alcove where we were kind of, crushed like sardines in there. And it was just not a good mental working environment.
Mm-hmm.
So I didn't last too long there. And then I traded from home for a little bit after that, but I stopped a little bit more than 2 years ago at this point.
Mm-hmm.
It wasn't worth it anymore for me. I'm very happy with what I did, with what I accomplished over the 12 or 13 years I was doing it.
Mm-hmm.
I feel like I did well or even overachieved for that time. But the time did come for it to come to an end for me.
Let's talk about the budgeting parts of this too, right? So you
Sure.
have the income from trading, and you were able to be successful enough with that where it's paid for the house. You're able. You recently moved.
I did.
The building a house down in Myrtle Beach.
I did decide to leave New York once my career wasn't tied here anymore. It was a decision I made. My family's down there, and I just felt like it was a new beginning. It's time for a new beginning for me.
Yeah, absolutely. So, and it's amazing that you're able to do all that, but like budgeting must have been a part of it, right? Like because
That's part of everything.
Yeah, most people don't understand that. Like I didn't learn that for a very long time, and I'm still getting better at that part of it too. So
okay.
Let's talk
are
about
you
it.
talking about budgeting as far as what kind of capital I had and what I risked based on that capital? What do you mean?
That, and also like when most people are transitioning or thinking about transitioning from or replacing the day job
Okay.
with trading, and now you're going to have an income that is going to be variable, like budgeting for the periods when you're going to have dry spells or drawdowns.
Yes.
Right?
Okay.
Like so.
Okay. So my advice there would be don't put all your eggs in one basket.
Okay.
Okay. If you want to do this as a career, great, but make sure you give yourself some time to learn it first. Don't just quit your job. Don't, you know, and then that's, I believe, the way you did it too.
Yeah.
Right? You didn't quit your job right away.
Yeah. No. Like I actually I could have left my job probably 5 or 6 years earlier than I did, and the reason why I didn't really boils down to fear for me at the time, or just like finding rational reasons to not do it.
Right.
Right, like oh, like the pay here is good, the vacation, blah blah blah. Oh, like I'll leave. Or once I'm able to equal my salary, actually, you know what? Well, I'll leave after I double my salary and have that in there. Oh, well, we're getting married, so we'll kick it down a little bit further. Oh,
Yeah.
well, the kid is on the way. We'll kick it down a little bit further.
Okay.
And that's basically what happened to me. And then I hit my breaking point, and I just, you know what? We actually do have like $500,000 saved. That's enough to get a business going and to trade off of.
Yeah.
And
Yeah. Well, everybody's situation is different. But like I said, I wouldn't put all your eggs in one basket immediately. But make sure you're comfortable with doing it. Try it out first. Do it on the side. You know, do it on your free time. Paper trade. That's fake trading.
right.
Get involved. See if you would have made money or lost money. Just I don't know. I just wouldn't jump in head first. I had that 2-year buffer where I was not trading yet and
Right.
learning the business. Without that, I probably wouldn't have been anywhere near as successful as I was.
So gain consistency in your trading first before you even think about doing this.
Make sure you're in a mental place where you can do it too, because emotions generally have no place in trading, and I learned that the hard way, as I mentioned earlier.
How would one go about doing that?
Go about getting rid of your emotions.
Or think no, or being in
It's not
an
easy.
emotional state. Like,
Much easier said than done. I don't know if there's any one way to say anyone can do it. It's to each their own. For me, it was having that bad experience and learning from it.
okay.
For somebody else, it may just be studying, reading the right books, learning everything they could possibly learn before they dive into it, and just trying it out.
Okay.
Making sure it's something they enjoy doing. Making sure it's something that they feel comfortable with. So, I was, especially after that incident, pretty comfortable doing it for a long time.
All right, great. Yeah, I think that there's a lot of people that are watching that are in that new camp that are thinking about doing this and making that kind of transition, and that advice of it gaining consistency first, doing it a little bit for a while on the side.
Yeah.
Get a couple of years experience under your belt, and then once you have that consistency, then starting to think about it. For the people that are already at that point, what will be their next steps in thinking about like, okay, like for household budgeting and expenses and having that variable paycheck of, yeah, sometimes it's going to be 3-4 times what I was getting at the day job in a single day. But you could have a dry spell where you're not bringing in anything, or
Right.
you're losing money. Like, walk us through that.
Well, all I can say there is just know that you can handle that. Be prepared for those days to happen, because they will happen. You will not make every day. You will not be in the red or in the black. You won't black every day. It's not. It doesn't work that way.
Okay.
You have to risk to make money, and you have to lose to gain money sometimes. Even the best brokers in the world have had terrible days. So again, it's just a level of comfortability.
Okay.
Knowing what you can handle and trying as much as possible. And I know it's easier said than done, but taking as much of your emotion out of trading as possible.
Did you have like a separate savings account or something like built up where your trading is in one pile and your...
Yeah, well, what happened was when I went in the ring, I had my salary from the past 3 years. I put away just about every penny except for small purchases.
Okay.
And I saved up, and eventually I knew I'd want to buy a home, but you needed a certain amount of money to be able to have a clearinghouse and have margin in your account. I saved that amount up, and I went in the ring. but my life situation was different. I was living at home at the time. I really didn't have too many bills. So like I said again, it's different for everybody. You know,
Right.
eventually I had my own house, but that was after I was in the ring. But everybody's situation is different. But you have to get to a level where you have that backing. A certain amount of margin will be required of you to be able to do this, and it should, just be comfortable with what you're willing to lose.
How much would you say that you like? How much cushion would you need? Like how much cushion did you have? Like,
Well, I don't know if it's different now than then, but I think my clearinghouse at the time, which was called Sterling Commodities, they required me to have 25,000 in there at all times. I think they raised it later on to like 50. I don't recall though. But like I said, the only time I ever got a margin call was that one day.
okay.
And I thank God for that every day. That was the only time. Because that means I never went on the margin after that ever again.
Is there anything else that people should need to know as far as budgeting and expenses and I guess the being able to sleep at night factor of trading?
I can't really attest to that because it's different for everybody.
Okay.
I would try to take as much emotion out of it. I'll say it again. I can't stress that point enough. But it's different for everybody. It really is.
So learning yourself.
Some people it's innate. Some people it's in the blood. It might have been a little bit for me because my father did it before I did. But it's different for everybody. There's no two same traders. It's
A lot of self-examination.
very much so. The one point I will continue to stress over and over again is take as much emotion out of trading as possible. Don't trade based on how you feel. Base it on what is technically probable.
Interesting. All
And I
right.
learned that too.
One other thing I'm curious about too. Now, how much would you say that sense of community played into trading for you? Like because you were there, you were live, you had
Okay.
a lot of other people around.
That's a good question.
Now it's very different, right? Like people are trading from home and you're kind of siloed.
That's a good question. It did play a role because copper brokers that stayed there after the initial wave of electronic trading, the bunch of us were basically all friends, and we shared our positions with each other. We shared our thoughts with each other, and their expertise was invaluable for me as a trader. And we helped each other out when we could.
Were you trading the same stuff as them, or
Just about, yeah. Generally when the rolls came, we all had the same positions on, varying in size and degree. But yes, we worked as a team for a good amount of it.
very
So yes, that did play a big role, and those guys were basically we were all friends with each other for the most part. It's not as cutthroat as it once was back in the day when there were many more traders there. It was more of us working together to preserve what we could.
All right, fantastic. Any final thoughts?
Any final thoughts? Well, I just would like to wish anyone going into the profession a very good luck to you, and keep an even keel.
Awesome, man. Really appreciate you taking the time. I've wanted to have this conversation now for a very, very, very long time and sit here and pick your brain and understand that kind of stuff. Like I got tremendous value from it.
I'm glad you did.
I'm sure everybody that's watching will get tremendous value from it. I'm going to go back and rewrite it and watch it again and again and get some other great nuggets from here too.
Great. I'm so glad about that.
Thank you for the time, brother.
The pleasure is mine.
All right, let's go get some running cars or something.
Okay.
All right. Take care, everybody. Much love. Peace out.
Take care.